Okay, it is recording. Only thing is, it's interesting. I think it's said to record on this computer, so that's.
Oh, Esteban just sent the spiritual thought.
Let's see here. Moroni 7:33. And Christ said, if you have faith in me, you will have power to do whatever is convenient for me. The scripture teaches me about faith in Jesus Christ and what we can do by faith. Taught me that if we have faith, we can do anything. This scripture inspires me to strengthen my faith in Jesus Christ through my actions, to have a spirit humble, and to constantly regret my mistakes. It's actually quite interesting. This week in my religion class, we're actually talking about the gifts of the Spirit, and this part of Moroni was actually part of what we were supposed to read, because those gifts are actually given through faith. And we actually, and it was interesting, I read something in there where we can actually ask for any gift of the Spirit that we need that will actually help us become more perfected.
That's interesting.
Yeah, I thought so. That was pretty cool. Let's see here. So, let's see. So, let's share this guy so we get our questions. Okay, so let's see. I'm sharing this right now. This is our group discussion. Let's see here. So we got that part done. And I also discovered last week I didn't actually summarize our votes and everything else at the end. So that was a little bit, that was a little exciting to do that afterwards, figuring out when we actually talked about each item. So let's go to the very first question. What value would we place on right now technologies?
Like, what's the value of the company?
Yep.
Correct me if I'm wrong, but as I was reading the case study, I think they said that they offered him like $50 million, but it was like stock options, if I'm understanding that correctly. I didn't get like a dollar amount for valuation. I felt that I kind of made a forecast in Excel just based off of their previous sales data, and it seemed to me that they were on track to keep growing. So I didn't think the $50 million was a fair offer. So I put it at probably like around 100 million. Just based off of what like the track and the growth that the company was had been setting like a track record for.
Let's see. I think that was about what I actually did. Because I remember I based it off of, because most businesses talk about a 5-year plan, so I just based it off an average of what they had made, taking out their best year and their worst year, and so it came out to almost at 20, and then I multiplied it out by 5, so yeah, it came out to around 100.
Right.
Did he also have the option of taking 50 cash and 50 with stocks? Was that right?
I thought they had all stock option. That's what I remember.
I'm gonna go into the case study and just double check that.
Oh, Steven just texted or sent something.
Okay.
Do you want me to read it?
Sure. Because yeah, Sally, I can't see it right now.
Okay. Well, it says in right now technologies they are having a continuous growing, partly because they knew how to learn from past mistakes and make plans to have a better future. Something that I can rescue from this company is their constant desire to be better. They do not get stuck in the present or are satisfied with their current achievement. Always seek, innovate, and improve, even when they have. Sorry, it's kind of small to me. Even when they have proposal for an OPI or IPO. They knew that. Oh, he just sent something more.
Yeah.
Today to make the screen bigger because I cannot read. It was not a time for something like that. The string are found in there. Sorry, I cannot read this, too small for me. I made it bigger, but it's still.
Here, where are you at? I can read it.
Where it says OPI, like half of the first paragraph.
Yeah, they knew that it was not the time for something like that.
Yeah.
Their strengths are found in their administrative team and their business model. They spotted two clear needs early on, at first linking strong leadership and more capital to continue to the next step. And he said, according to the data of the case, I could estimate that right now has a value of 2.5 million. While it fulfills the projection and growth, the future value of right now will be close to 5 million. The estimate is that right now it is growing at a rate of 60%, according to the data, tests 2 and 6. If we take the current income and divide it by the projected income for 1 year, then we can project a growth rate of 60%.
60%.
Yeah, I know their last year they actually did very well. I think it was what, 35? If I remember it right.
Right. My whole thing with that is even if they are, I know it's not sustainable, but say they did grow at 60%, then that $50 million offer in stock, because I'm reading here in the case study, it just says, let me go back to it. It says, was willing to pay this multiple on right now's revenue rate, approximately 50 million, rather than the company's trailing 12 months of sales of 35 million.
Mm-hmm.
So yeah, I think it was just a stock option, but even if that growth rate, that $50 million offer is going to be irrelevant in a few years, and at least in my opinion.
That's what I thought. Not only that, I didn't see really anybody wanting to stock when they're selling a company, but they want to at least have a little bit of cash in the pocket.
Right, because that stock offer is also based on how the other company is running, like how their board of directors are, how their sales looks, and that just opens up another can of worms. Now, obviously, if someone offered me $50 million in Apple stock when they first came out, obviously I would take that. But
not only that, they don't know what would actually happen in the stock market if they actually bought this company out. I mean, their stock actually go down because of it. So, which will instantly turn that stock into a lower valued item.
Yeah, because their profit margins decrease as they go out and purchase other ventures. Yeah.
Exactly. Yeah, let's see here. So let's see here. And also, he actually wrote a little bit more, Steven did. I was thinking if we talk about venture capital investors, they could request at least 387 million. On the other hand, the other board members could be more aligned with VC, let's see, inverters. I imagine investors. Well, I mean, obviously, the VC guys, they want their money, plain and simple. They're going to want a serious amount of return for their investment because they're the ones that actually took the risk.
Mm-hmm.
Right. Yeah, that 50 million's not gonna go around very often. Like it's gonna get taken up pretty quickly.
Oh yeah. Let's see here. So we have a range of values.
Yeah.
So let's see here. And so let's see. So I said how I came up to my conclusion, which I think was at 100 million. Let's see here. Steven wrote down how he got his conclusion. Let's see here. Any other ideas?
No. Are we already on question number 4?
I think we're on 3, or we're getting ready to start 3. The last thing I had to add for the valuation is I could see where Steven got his valuation, because he was doing it not based off of sales but off of net incomes or loss, which he did make a good point. But I think if they did a better job of somehow eliminating their cost of goods sold, they could make their profit margins a little bit better and therefore have a bigger valuation. Just another side note.
Let's see here. I believe that this is strange, and now it's just combining all of his messages here. I believe that right now should bring the current offer closer because the IPO is very unpredictable. And on the other hand, we have the cost of being a public company. Besides that, 1 million means a very high risk, and it is a greater risk than they are willing to take over right now too. They would follow in the footsteps of Salesforce.com, their next strongest competitor, which in turn would play a role in achieving an IPO status. For me, they should grow organically, although it is not predictable. Let's see here. Not predictable. Lake, okay. Let's see here. The offer you have at the table is fair, and you can give them everything the board wants for a return on investment. Let's see here. I'm guessing Esteban is signing off. It says bye and see you. Well, if that's the case, have a nice night, Esteban. Let's see. Okay, so let's see. Let's see. Esteban said about the. He actually did type in something about the investors. They would seek a 30 to 50% internal rate of return, and that's where he came up with that 387 million for them. Which, let's see here. So what we need to see is the internal rate of return. Geez, I used to know how to do that. Okay. So do we have the? Let's see. Let's go back. Personally, I flew through the case study the other night, which was strange. Come on. Only challenging my house with everybody on Wi-Fi.
Daniel, you're up at BYUI. Has optics been sucking for you too?
What was that again?
Has the Wi-Fi at your apartment been sucking for you too?
No, not really.
Gosh, at North Point, it's awful.
Really?
Oh yeah.
No, here's totally fine. It's weird. It's weird when something happens, but most of the time, it's good.
Well, my problem is, let's see here, we have TVs on the Wi-Fi, we have cell phones, we have PlayStation 4s, there's people's computers. So let's see here. Let's get down to the bottom where the numbers are. Oops.
I gotta run to the restroom really quick. I'll be right back.
No problem. Okay, let's hear, because all I did was I just went based off their revenue because that's what I understood. But figuring out their value was off of revenue. So let's see here. So let's see, internal return rate. Because my only concern was that showing based off their net income, it was actually a loss every year, even though they still had a bunch of working cash. Actually, let's see, where is it? They actually had a bunch of cash.
Okay, yeah.
I believe, if I remember right. It's really strange. It's like, why don't you just take care of the debts? I mean, but yeah. They
So it's
actually
like
have.
they were doing good, and then just like a bunch of ups and downs.
Well, not only that, if you look at their working capital, it's actually negative, but they're increasing their assets, and they also have all this total deferred revenue. That was actually another thing. I just couldn't figure out why they would do that. Is why they would have a total deferred. They'd have all that deferred revenue. So, I mean, I know there's tax. There's tax reasons for it, but their long-term debt was going down after they went into debt. And so then the stockholders actually are really messed up there.
Where exactly are you reading right now?
I'm at the very bottom of that page.
Okay, totally.
Stockholders deficit. Yeah. It's like I'd be
Are
pretty.
you reading about their deferred revenue?
Yeah, that I didn't. I just didn't understand why they would defer it outside of tax interest.
That's the only thing I could think of.
Otherwise, it doesn't make sense to me why they would hold off on claiming revenue. So, I mean, yeah, they're jumping it up every year. I mean, geez. Yet their net.
I mean, it's not like they even put it in accounts receivable. They deferred it.
Yeah. Yet they actually have a net loss every year. Total stockholder deficit is getting bigger. Their working capital is getting worse. I mean, just doesn't make sense to me. So we need to figure out internal rate of return. Okay.
Oh, Steven just sent something else.
Oh, cool. I remember that. I actually did that last semester. Net cash inflow for the period. You have a discount rate. Yeah, that's. So initial investment costs. Okay, so let's see here. But what is our discount rate?
They didn't give us a discount rate.
No. Because basically it'd be their net cash inflow for the period divided by 1 plus the discount rate to the power of the number of time periods minus the total initial investment cost. That'd be the internal rate of return. That's the only thing I'm not sure what the discount rate would be. Let's see here. I mean, because it could make a big difference in the number. If we do a 0 for it, makes the math a lot easier. You're talking, let's see, net cash inflow during the period. So cash and cash equivalents, I guess. Let's go back to the other one. So I think that actually had it in there. Whoops. Revenues. So that's here. So they have working capital, or they have cash equivalents. I'm guessing that's what we would call it. So that'd be 83, but minus what they started with. That means, actually, wait a second. No, because 1 to the 5th will still be 1. It still doesn't look good. Because we're talking to be basically that number minus that one. And it doesn't look good. Unless we go by current assets. I mean, you just want to go over the last 2 years of theirs, or their deferred revenue, which is crazy. Because yeah, even their stockholder deficit went up.
Where's that at again?
Right here.
Oh yeah, from 41 to 45.
Mm-hmm. But even though the thing is, though, the total liabilities and that's actually improved. Let's see here. Actually, by what, 600,000? Because this is in thousands.
And what's again the number that we're trying to figure out?
It says to figure out the internal. Whoops. Let's go back to this. Oops, wrong one. Come on. Let's go back. That's the instructions. That's. Oh, come on, really. Oh, jeez.
I have it here. I have the questions here with me.
I keep on hearing the Backstreet Boys because they're doing a concert in Chile and my family's watching it.
I'm sorry you have to listen to that.
I mean, it's my son's favorite group. It's really weird.
Interesting.
And my wife's from Chile, so we have the Chilean stations, and yeah, but I don't think they're actually playing it on the international feed.
Gotcha.
So see, it's number 3 there. If Greg's investors seek a 30 to 50% eternal rate of return, what exit value would they expect? So the internal rate of return basically is it's basically the let's see, what did I read? It was the dollars. Let's see, net cash inflow during the period of T. So whatever the net cash inflow was for the period, so it looks like 5 periods. Then it would be divided by 1 plus the discount rate, which I'm not sure what discount rate we would give them, and that would actually be to the power of T. So the number of time periods minus the initial investment cost. So we can, let's see here. So their net cash flow, actually, so it'd be for all 5 periods. what their net cash flow was for the 5 periods. So if that's this here, it would be the sum of these. And let's see here. It all depends on what the what that nice little discount rate would be. That would, if there is no discount rate, then it's simple math. It would actually just be these 4.
Okay.
Because we'd be adding those 5 up and minusing that first one.
Mm-hmm. Then should we stick with that number?
I'm not sure. It's the only one that makes sense to me out of the group of numbers we have for being a net cash inflow. Because nothing else actually talks about cash.
Mm-hmm.
And this would be actually what they would actually have at the end. So that,
Okay.
which would actually be 39,784. But these aren't 1,000.
You're subtracting the 45
I'm actually adding.
minus.
Actually, all I did was just add the last 4 up because
Oh.
it would actually because it would be all 5 of them minus the initial one.
Okay, so you're just adding up all the numbers from the first row.
Yeah, except for the 1999 one.
Okay. Mm-hmm.
And since we're dealing with this stuff in thousands, it means their actual net cash flow would have been almost $40 million. Would be the internal rate of return. That would be that. So if you times that by 0.3, that'd be 11, almost 12 million. Then 0.5 is almost 20 million.
Okay.
But that's if I'm starting off with the right numbers.
Yeah. So that would be like 20 something if they seek
Yeah, 50%.
50%.
50% would be just under 20 million. You're talking 19,892,000.
If it's 50%.
Yep.
Okay. So it should be less than that because they're getting from 30 to 50. So if they're getting 19 from 50,
So
get
yeah.
less.
So if it's 30% of it, then it would be $11,935,200.
Mm-hmm. Okay.
That's one of the nice things about this, just having to remember it's all in thousands, as it says up there towards the top here. Come on. At the top of the page. That is my thought. I'm not sure if anybody else has any other thoughts.
That makes sense to me, and I honestly don't have like other solution or other number to prove that. So, and that makes sense to me now.
All right.
Okay, let's hear. I'm just reading what Esteban has written down. It said, from reading introduction in the last paragraph, I got the situation in this case similar to situations in the other cases studied this semester. It's about the CEO of the company. In the case of the CEO of Right Now Technologies has a decision to make. The only difference is, in the case, the decision isn't as stressful as the others. There has been an acquisition offer from a large software company to Greg Gianforte, CEO of Right Now Technologies. This offer, from what I understand, is a very good thing that will probably make him a lot of money. This case explains the startup and growth of the Right Now Technologies business. It also explains the background of this company, like what its value proposition is. It then eventually explains how Giaforte got the offer that is in front of him at this moment. It will explain the events that led up to it, as well as the company did to become so successful. We are not given the number of shares or the net income. We don't have enough data. I tried to take the profit and try to do something with it, since I found out that having a good positive cash flow could really help you knowing where the company is. And seems like technology right now says that they always will be up and down. When they first go public, they did pretty bad with calculating their shares and getting money to their costs. So once you value a company, whenever it sets it at its top, like performing pretty well, it's logic that it's going to have a greater value. And because the current cash flow, let's see here, it says they want like a 30 to 50% internal rate of return. So they are off the venture. So they are off the venture firm, or if they did acquisition, was offering 50 million for the company. And so maybe in a year or two, a few times, I just did 1 year by 40%, and it goes to 70 million. So let's see, I believe talking about going further, another year down the road. The way I understand this. And thank you, Esteban. That is, they actually didn't go public though. That was just the valuation that the calculus had. They actually made them at first 100 million, I think it was, and then the second time it was 129 million. So the question is, do we have an idea about number 3?
Well, I thought that we already had that number.
All
the
right.
19 something for the 50.
All right.
Or the 11 for the 30. And it's like depending which number between the 30 and 50.
Yeah. So it'll be somewhere between the 11 and 20 million.
Mm-hmm. If it's 30 to 50.
Yep. Okay. So let's see here. So then number 4, then provide your analysis of each of the options Greg is considering. Based on your analysis, what should Greg do? And consider Greg's goals. And
accept the offer. That's the first one. The second, the IPO, or just keep growing, right?
Yes.
Those are the 3 different.
He can sell. He can try to do the IPO, or he can try to keep growing the business.
If I was him, I would just accept the offer and sell it. I think it's a good option for him right now. He already built it, and it's proven that it works. He would take a lot of money with him, and it's not risky at all. Like if he goes public, it's kind of risky, and he has to deal with all the process. So from my point of view, the easiest and quickest way for him is just to accept the offer and sell it.
Okay.
I opted for him to grow organically, based on the knowledge of when you have venture capital firms, they want to get their money out of it plus a profit. And when I went back and looked at the numbers, and I believe the venture capitalists, they gave him in excess of over 25 million, I believe it was, because I know they received a first round of financing, and then they did a second round, which was like 16.4 million. This option's only for $50 million in stock. So when you take that out, there's not much left over for everybody else involved. I agree with Daniel with the IPO. It's just there's just too much of a headache right now. But as far as the company itself, it's growing, it's getting better, it's taking more of other competitors' market share. Therefore, I feel like if they opted to grow more organically, they could either sell it in a couple of years from now, or they could try another IPO, or they could wait until the market's better from like the NASDAQ recovering, and then they could try and do an IPO then, and then hopefully there'd be less headache and they'd get more return for their money during that timing.
Actually, that's
I agree
pretty
with
much
that
exactly
too.
what I was thinking. Because yeah, it seems like this one, along with the one we did last week, the IPO is just too expensive for them at this time. They don't have the funds for that type of investment to try to go public. Not only that, the business was still pretty small for being a publicly owned business. So yeah, that's the reason why I thought that he should just continue on. Because not only that, I didn't think the stock buyout would be an actual worthwhile option for them, because it means that they actually have to try to sell the shares in order to have any cash come from it.
Right.
And then you get the government looking at you. Okay, now you're selling it right when it just happens it tanks or something happens where something goes wrong. All of a sudden you have the government's looking in your business. That's just not a pleasant experience.
Right.
Oh yeah, I would say just keep on growing for the time being, and hopefully somebody will come in a couple of years with an actual cash offer.
Right. Well,
Let's see here. Is there anything else?
doesn't look like it.
Okay, so let's see here. So basically, we actually had some different values for Right Now Technologies. Let's see here. I think Steven had it around 5 million. I think Austin and I actually were a little more generous and put them up around 100 million. Let's see here. And let's see here. My feeling was it's just basing off of their profits and actually the average of them, and doing a 5-year plan type range. Let's see here, and I have a feeling that the investors would expect quite a bit of in return. So that would actually mean that the internal rate of return, since we're just talking about how much they put into the company, isn't even high enough to make it worthwhile for them, because they would actually lose money for what they actually invest.
And back to the valuation. If a company is offering, I just think F-Ston's valuation is a little bit low, because I mean, if you got a company offering $50 million in stock options for their company, in my mind, it just makes sense for it to be a lot higher than what it was than what he estimated it to be, if that makes sense to anybody.
Yeah, it does to me.
Because everyone's going to try and buy a business for the lowest possible price if they believe in it enough, where they're trying to cut out their competitors, and no one's going to be like, oh, well, your company is really valued at 5 million, but we're going to give you 50 anyway. But that's just my thought process.
I would agree. I would never pay 10 times as much as something's worth.
Right.
So yeah, so it seems like that number 3 question is still the stickler, though.
Yeah.
Because from my quick calculations with the numbers I thought were the ones that we'd actually look at, it would barely even cover what they actually it wouldn't even covered what they actually put into the company.
Right.
So there has to be something else with that one. But then let's hear. And then we considered Greg's options, and I think for the most part, all of us feel that he should continue on with the business and try to keep on growing it. Possibly wait for a chance to actually do an IPO when the company's bigger, or maybe even have an actual cash offer when somebody wants to buy the company. I can't think of anything else. Was there anything else?
I don't think so.
No, I don't think so.
Okay. So my only question is, how do I save this as a link and not as a file on my computer?
That's an excellent question. I've never run into this problem before. Well, there should be a when you end the meeting, did it already give you the option of selecting record to the cloud or record to the computer?
Well, actually, it told me to record to the computer. That's the only option it gave me.
Oh,
So that's probably what it is. I'll have to figure out how to record to the cloud then. Okay.
okay. The only thing I could recommend is if it goes in and tries to make you save it, then in the computer, then you could just
Try to save it to the cloud. Save it to a cloud somewhere.
Either that or just save it into a document that you know that you're not going to lose, and then just right click and drag it or something. I don't know. I've never had that problem before.
Well, no, actually the file, last week the file, it just wouldn't go into a Word document or anything else. So I actually just sent the file in because that's what I had. So I'll see what happens when I finish up here, see if I can actually save it.
Okay.
In something else, maybe into my YouTube or something. I mean, it's.
Yeah, it works too.
Mm-hmm. But okay. Is there anything else for tonight?
No. Do you guys want me to put the questions in the Google Doc again?
So that's for Saturday, right? It's due Saturday.
Yes, it is.
Okay. Is that a different one from the one that we just did? I always get confused. Sorry if I already asked this.
Well, normally, like when the semester first started, the group discussion questions would be different from the group assignment, but it looks like nowadays they're the same.
Mm-hmm.
Correct me if I'm wrong on that.
I think that's what I've been seeing.
So, because this was this case was due yesterday, right? So for yesterday we have to submit one, and for Saturday we have another one.
Yeah, Saturdays is actually the midterm. So yeah, but then we also have this group thing.
Yeah, we have the group assignment and the midterm due that day.
Okay. And the midterm is individual.
Yep.
Yeah. Yep. It's another essay.
Yeah.
Okay.
I was not expecting there to be so many freaking essays in this course.
Actually, I kind of like the midterm I had in my finance class, my B301 class. 30 questions. I was done in about 20 minutes.
Oh, I loved that class. It was super easy.
Oh, yes.
Which class is that?
It was the B301.
Financial management.
Yeah. I couldn't believe it. It's like, oh my goodness.
Have you taken 341 yet?
Actually, I transferred in, and I had taken the course that they actually said was the equivalent at Northern Arizona University. So
you are so lucky, my friend.
Which one is that? The one that you're talking about, Austin?
It's a marketing class.
Oh,
I can't stand it. I'm not a very creative person. Like if you give me numbers and say, "Hey, find this answer," I can do it. But me and marketing don't get along.
Well, that's how I am. I'm not big on essays. I mean, this semester I'm taking 3 classes. My last 3 classes, I should graduate here in April.
Nice, man.
Yeah. But yeah, these essays are killing me. I don't like writing.
Yeah, see, I'm good at English. I just hate it.
Like, give me spreadsheets. I'll figure out a spreadsheet to figure out the answers you need, but don't make me everything. So yeah.
Amen to that, brother.
So if there isn't anything else, I think we're good then. I'm currently putting in the questions in the doc.
Okay.
And could you go ahead and make sure that it gets sent to my Gmail, because I haven't seen that.
Really?
Yeah. For some reason, I look for it. I even figured out I went into the settings of Gmail, so now I'm not going to get confused with all the emails I get from the group, because it was just grouping them all in there. However,
right. So
now I actually have figured out where I can actually get it, where it shows each individual email much better. I really hated that.
Okay, they're in. Now let me check on you here. It says you're on there.
Okay. Strange.
Here, let me get your email address and I'll re-put it in.
Okay, it's Brain Mitchell. So instead of Brian Mitchell, just switch that A and that I around in my first name. brainmitchell@gmail.com.
Oh, is this supposed to be BRAIN?
Yes, it is.
I'm an idiot. There you are. Okay, it is now sent to you.
Cool. So if there's nothing else, I think we're good then.
Okay.
All right. Well, you guys have a good night and good luck on the midterm.
And you too, and thanks.
All right, thanks. Bye.
Okay, and bye.